Well, it's been quite a wild day in some of these markets. John Jenkinson with you, and we're going to get right into it. First of all, let's make our first stop over here in the corn market. These futures markets provided by Bar Chart. December corn up 2 pennies, March up 2 at 4.15 3/4, May up 2 at 4.19 3/4. You can kind of see the pattern developing there. Over in the soybean market itself, it's November up 6 3/4. But we've got actually a little bit more activity on that January contract. It's up 11.5 now at 11.13. Continues to rocket higher. March up to 11 at 11.10 1/4. But that still leaves us right at 5.5 cents off of the top end of the range here for today's trade. December Chicago wheat down 3/4, but now the rest of those contracts have basically firmed. We've got the new crop July up 1.5 cents. Kansas City wheat for December up 1 3/4, and the July is up 1 3/4 also. That July is at 5.73 3/4. Minneapolis wheat for December up 1.5. This was a market that was lower just 30 minutes ago. Now the July is up 3 cents at 5.86 And cotton still continues its rally. March up 140 points at 71.55 cents per pound. Here with us, Todd Horwitz, Bubba Trading. Todd, is there any way to make sense out of any of these markets today? It's been quite a wild ride.
Good morning, John. Well, I think you've got a crazy market because, of course, the potential of a virus, cure of a vaccine, has kind of opened up everything with potential now. So we've now gone from from woe is me that we're going to shut everything down to, hey, we got a real shot here to have this all under control, which is what President Trump had said the entire time. And I think you're going to see some real wild and crazy action, especially in the indexes, but I think also in the ag spot as well. I mean, we're seeing it this morning. Corn, wheat, and beans have been extremely wild, but they are leaning higher, which makes sense because one of our things we've talked about all the time is the biggest problem we've had there is the lack of an economy open. If this proves to be true, then that means we're going to open all that much faster, and that means everything can kind of get back to as much normal as possible, which will help with demand. Every problem that we have suffered through can then be taken away a little bit, and it puts us in a much better condition.
Todd, during times like this, whether the market goes up or down, whether you're an end user or a producer, how do you limit your risk, your exposure in these kind of market situations?
Well, John, I always talk to everybody, and I said the most important thing you could ever do is use the hedging model, because one thing, if you do it properly, you never give up the upside of these markets. However, you do stop the downside. And that, when you're creating something and you're actually borrowing, lots of money to get this stuff planted, harvested, and done, and basically haven't collected dime one yet, you need to protect those overall input costs, because we never know what's going to directly happen in the markets. We never know what's going to happen anywhere. But what we do know is that if we're protected to the downside, then the upside will take care of itself. And I think that is one of the classic errors that most farmers and producers make in general, because we always get spoiled when they're going up. Well, heck, we don't have to worry about it. And then, of course, they get creamed and everybody starts panicking. So I think that's very important that you understand that you want to protect the downside. The upside is easy. And if you do it correctly, you'll always have that potential.
All right, Todd, we're going to take a break and come back in just a moment. Stay with us right here on RFD TV and Rural Radio, channel 147 on Sirius XM. We watch a lot of markets here on the Market Day Report, and included in with that, of course, is the livestock market. And let's go to the live cattle market right now on our futures provided by Bar Chart. We've got December live cattle up 297 at 111.62. But remember, we have a new a new limit. A new limit. It's no longer $3. It's actually $4 in this market. So we've hit the $3 mark on the December contract. We could go another dollar higher than this. In fact, we've gone as high as 111.77, and we're at 111.65, so we're closing in on that. February up 265 now at 114.80. Now in the feeder cattle market, we've got a new daily limit of $5, and we are up 480 on the January at 140.72. March is up 435 at 139.52, and the April's up 392. Big moves over here in the cattle market. We're watching that very sharply. December hogs up 80 at 65.70. February hogs up 77. April hogs up 32. What a day this has been for the cattle market. What do you attribute this to, Todd?
Well, John, you know, as I texted this morning, well before they even opened, that this would most likely create a continuation of the uptrend in cattle, both fats and feeders, and then also probably trigger an uptrend in hogs, because I think what we've seen is exactly what we expected. If we can start to reduce supplies and start to get the entire production chain back in business, then we open up everything back to the consumer, because, you know, the consumer has been overpaying a little bit recently because of, you know, what was going on. It couldn't get processed. But if we can get everything back and rolling, then it puts us back in normal business, which then would automatically bring us to much higher pricing, which is what I'm expecting to continue to happen.
So what's your thoughts then on the hog market? Does one tide lift all boats in this particular instance?
Well, I think the hogs market, you know, we were slightly negative on hogs going in. But, you know, I kept saying that, you know, they're getting to levels that I would much rather be a participant from the ownership side. And I think this might be the trick that'll push it to the top and push it out of that little bit of a down spot it was in, and then help it start to rise. And I think it'll be, you know, it'll be the same as a much bigger demand. I mean, to think about, you know, what's going to happen over the holidays. If we have hope over the holidays, which it looks like we're going to have, then that will even create more demand, because people will be more willing to do things that they were trying to stay away from before this all started. So I think right now, as we can see it, the picture looks very rosy at the moment.
Todd, thank you very much. Hope you have a good afternoon.
Thank you, John.
Yeah, thank you. Christina, back to you.